I call it Andy Dufresne's method of building Shawshank's library. This clarity of outcome matched with insane perseverance. And if you're not familiar with the scene, like for 6 years, Andy is writing letters looking for used books so he can create a library in the prison. Finally, a bunch of books shows up and one of the guards says, "It only took 6 years. You going to stop writing these letters now?" And Andy's response is, "No, from now on, I'll write two."
Welcome to the Context Window, AI Insurance and the Humans Behind It, podcast about what's actually working at the intersection of AI and insurance. I am your host, Kyle Nakasuji, founder of ClearCover and Dearborn Labs. Each episode, I sit down with the operators, builders, and executives who are deploying AI inside real insurance companies and get to the real story behind the decisions, the trade offs, and the hard won lessons. Today, I have the pleasure of talking with the long term friend of mine, Steve Lekas, co founder and CEO of Branch Insurance, the first company built to optimize the process of bundling home and auto insurance. Steve, welcome to the show and thank you for being here.
Thanks for having me, Kyle.
So, Steve, we would have briefed you on the run of show, but we do two things here at the Context Window. The first thing we do is we load the context window, which is get sort of deep into your story as a builder, an operator, a person, a human behind the AI, and then we'll pivot and we'll spend some of the episode talking about your business and how AI impacts it. So, want to get deeply into your background, but before we do, maybe give the audience the 30-second overview of you and the businesses you run.
Yeah, happy to. Uh, I started my career about 25 years ago in PNC insurance. I was working at Allstate, first notice of loss, then into technology, into underwriting, product development, product management, into a strategy role. Allstate bought a company called Esurance and sent me out to San Francisco. I had the cool opportunity to build the first online home insurance business in the US. Left there while I was having more babies, come back to the Midwest, and took a job with Verisk Analytics, became the president of their personal lines business at ISO, and then started Branch on the idea that we didn't have to make these trade-off decisions between risk segmentation and customer effort, right? I mean, the original auto app was like name, address, year, make, model. And as we find more predictive inputs, we add questions that you have to answer to buy stuff. And so, like at Branch, I believed we could make an insurance business that you could buy every insurance product you needed in a single transaction with just a name and address. And then I built it as a reciprocal exchange on the idea that insurance is a cooperative product, a communal good. And then we really focused on how you could bring insurance to people in ways that could make it less expensive. And so, like this community idea, lower expense, easier risk transfer, all of this is just a product of how I got here.
All right, Steve, very helpful. Now, so most of 18-year-olds don't wake up thinking about the possible trade-offs in risk segmentation and speed or building an insurance business for a communal good. So let's now go all the way back and start us at the beginning and like what got you to the point where you thought and cared about those things. Where did you grow up?
So I grew up outside of Akron, Ohio. Town was called Hudson. Uh, Coincidentally, there was a big insurance office for Allstate there, and
Mhm.
those two things were then tied. I had grown up in a big Greek family, three sisters and just cousins for days. And community was always a big part of our culture. And I grew up, though, in non cooperative businesses. And so, like, finding that as a love for me came later in life.
What Akron, Ohio. I've only been once. I went to a basketball game. We had a friend who played there. They had drive-through liquor stores, which was a first for me. I had never visited like a drive-through liquor store, but I hadn't done much in Akron. What did you do growing up in Akron with that Greek family? What were you into?
I mean, growing up, I just played a lot of sports.
Okay.
I played just about everything as a little kid, and then ended up mostly in soccer and basketball on a longer term basis. But I kind of stopped all the sports by the time I was 15. I started working when I was 13 and then year round when I was 15. And I had been really into computers or computing as well. I got my first PC when I was 4. It was an Apple IIe compatible that my
Mm,
uncle had made out of parts.
nice.
And we had a phone that sat on a modem, right, like a corded phone, and so I started building PCs when I was 11. But yeah, quit all the sports just to work year round while I was in school at 15.
Uh, what, okay, so Apple computer or like old Apple computer, what were you doing with it? You playing like number munchers? Were you actually building like what'd you do with that thing?
No, I mean, like, you had to operate everything on command line. It
It
didn't
was all
have
command
apps.
line.
Yeah,
Yeah.
right. And so, like, I wasn't coding, but at the same time, like, you couldn't help but have some confidence and familiarity because, like, you were communicating with the computer through text.
Okay.
And so, like, it was all video games at 4 and 5, right? And like, there's still games I look for that I'd love to find again.
Yeah.
It's back in the era where video games were impossible to beat, right? I don't
Mhm.
know if you remember this, but
Yep.
yeah. And then it wasn't until later I started just my dad was an electrical engineer, and so like we were always making things and building things, and so like I would be modifying most any electronic that I had. I think I was probably only 6 or 7. I had taken apart an Optimus Prime transformer. It was this big thing that held
Yeah.
all your other transformers, and if you pressed this button on the head, that it would sound like an alarm clock. And so I, I had wired his head into like just a very simple alarm system. You close the circuit when you step into my room, and then the alarm would go off. And like this was just a natural progression into just we grew up my family on a multi generational basis. We're immigrants, and then you know people not well off but hardworking, and then college educated people, and then there was my generation. And so like we grew up doing all of the things, right? Where I was doing, I grew up holding the flashlight for my dad, but then
Yeah.
like building houses, painting, working on cars, like whatever it was.
We had a command line game called Sleuth when I was growing up, where you were like a
I
detective and
did
you had to,
not.
and it was the only command line game I played, and I think it was unwinnable. I never won. So again, like either I wasn't smart enough, or the game itself was unwinnable. Let's go with the latter for my ego, please. All right. So interestingly, started off in computers, and so how'd you find your way from like a budding computer builder to insurance?
Yeah, well, I had always been in a hurry to get into the business world. And so I started working early, but I didn't really have a lot of um, ideas of how to get where I thought I was going. I ultimately thought I would run companies from like a really young age. And,
Do you know
and
why? Do you know what like
you know,
prompted you to think you wanted to be in business that early?
no, I don't know. I mean, like my dad worked for General Electric, and he asked me as a small kid, like, what do you want to be? And the way he told the story is he was expecting firefighter or you know policeman or teacher, and I just told him Jack Welch. And so like this led me to getting my Six Sigma certs early in my career
Hmm.
and things like that. But like no, I never really have had a good reason why. I just really appreciated the clarity, right? Like I watched a lot of people trying to figure out like what do I want to do with my life, and I just never had to answer that question. It was just like in what part of business should I apply my time?
Hmm.
Um, and so like then when I'm getting out of high school, I had decided um, you know, it would be something in business, but I just knew that I would try to compress the time. I wasn't so interested in college as like a place to learn things. I'm a book learner, and I've always found it so much faster to read than to listen. And so lectures were really hard for me.
Mm.
Um, but but yeah, I mean, so like I was in a big hurry. I also had this early observation of like people in the positions I aspired to had varied experiences. And so like I was, this idea of depth versus breadth and how can you have enough of both. And I'd come to this idea that like information is an investable asset in my teens. And so like it compounds like interest. And so like it's a cruel joke, that we all have our greatest wealth at the end of our lives and
Hmm.
all the greatest wealth of insight at the end of our lives, if only you could have it, at the beginning.
Yeah.
And so that was kind of my method, was how do you amass as many experiences in business as you can as fast as you can.
It's incredibly insightful. I mean, what you were what, 18?
Yeah, about 18 at that
Yeah, I
point.
didn't know what the hell I was going to do with my life at 18. I hadn't had a thought even close to that deep. I think until maybe, well, I'm 40 and I'm not sure I've had one yet. So I'm working on it, but
You're
that,
doing great, by the way.
yeah. Thank you. That was, I'm glad you found that part of the script we sent you. So all right. So computers, now you made the decision that like you want to go into business. Information is this sort of compounding asset in your life. And the more you can acquire, the better. How do you go about doing that?
My next step was, so I started working at a retirement home, which was such a wild experience. I tell you stories about that all day, but I did that for 4 years, in a number of different roles. And I'm working at this retirement home. I'm now 18, um, or I'm 17. And one of my coworkers says that, he just applied across the street. I mean, it's almost directly across the street at this 1,500 person Allstate installation in
Hmm.
Hudson, Ohio. I mean, it's like a mile and a half from where I grew up. And, so, I asked him why. I mean, we're in food service. So, like, he's going to Allstate doesn't really, no logical explanation, but he's like, well, they pay for college. And this sounded very compelling as opposed to me paying for college.
Hmm.
And so I had then decided I would work for Allstate, and I started. I went to the place and I asked, like, how do you get access to what jobs are available? And they gave me, a listing, and then they told me there was an online site. And so, I was planning to go to school for tech, and so I thought, like, oh, this is great. I mean, I've been I've been playing with computers and networks, at this point for more than a third of my life, and so I started applying for tech jobs at Allstate, and they were generally flatly rejecting me, at each application.
You wait, so you went across, like you went there to the
Yeah.
building and
Yep.
like so walk me through. So you walk in. How did you just like look around for someone who looked like HR? You went to the front desk and said, "I want a
Well,
job."
yeah, it was a sizable enough office that like you could, there was an HR office like near the walk-in. It's a huge
Okay.
concrete building, and then there's many steps to get up the front door. And you walk in, and then you can find a guard and get directed. And so I get directed over to HR. They're nice, very nice people. We spend some time together. They send me. I'm like, I also looked young for my age, so like I don't think anyone was taking me that seriously. Yeah, fake IDs were never in my future. And so, anyway, so they told me no on my first application. And so I didn't totally inspect the problem at that point. I just decided that, like, I would just triple down on it.
Hmm,
And so I got into this cadence of every month or so, I would either come to the office with a handwritten application,
hmm,
or I would put in an online application. And there were like a half a dozen jobs I was applying for, all generally in the network part of their company, and so every time I would just reject it. And so over the many times I'd be at the office, I learned the HR people. I can still tell you almost all their names, and so like they were all very nice, but they also would just flatly reject me.
mhm.
And so then I started rotating them in phone calls. And so I'd put an application at the door, I'd put an application online, I'd call an HR rep.
Hmm.
And I did this for 2 years. Um,
Two
and
years.
so, yeah, for 2 years. And so now I am an early sophomore in college, and finally the one of the HR reps like exasperated. And God, these people have been accommodating, right? I mean, I've taken a lot of their time as an applicant with no dream of getting a job. He's like, "You're never going to get this job. Like, you have no experience." And like, I actually took another job in automobile repossession, and I was doing, some voluntary repos, and I did all their network administration. So I had actually been building a little bit of experience, but they were flatly opposed. And he's like, "You should just take a job in claims in first notice of loss, because like you get a foot in the door maybe, and stop calling me." And so I said, "Well, does that pay for school too?" And he's like, "Yeah." And so like it was like weeks later, I was an Allstate employee.
Oh, funny.
Yeah, this has been a really good method for me. I mean, the thing I didn't learn well or didn't know well at the time is I should have been better inspected the problem. I wasted a lot of reps, and I could have compressed the timeline. But the perseverance, my co-founder and some of the other folks I work with here, Branch, have heard me talk about this a lot. I call it Andy Dufresne's method of building Shawshank's library.
Hmm.
And it's this clarity of outcome matched with like maybe insane perseverance.
Hmm.
And if you're not familiar with the scene, like for 6 years, Andy is writing letters to these libraries looking for used books so he can create a library in the prison. And they finally a bunch of books shows up, and everybody's surprised. And one of the guards says, like, "Well, it only took 6 years." And then one of the other guys is like congratulating him. He's like, "You gonna stop writing these letters now?" And Andy's response is, "No. From now on, I'll write two." Right, two a month. I think it was one a month or something. And I think like it's such a. I think for entrepreneurs especially, it's good for everybody, to have like, you don't want to do this in everything. You want to be, clear about the things that are important. But that's how I got into an insurance company.
It's a fascinating story. I think it speaks to your character. It speaks to your perseverance and determination. There's this great I don't even know who to attribute it to, but I found it to be quite true. This quote that I'll paraphrase, but it says that the sort of most surefire way to feel like a failure, not to be a failure, mind you, just to feel like one, is to have your expectations vastly exceed your effort,
Hmm.
right? And it sounds to me like you had pretty significant expectations in terms of what you wanted to do with your career and where you wanted to take it, but your effort matched them. And I think what people sort of where they often find failure in their lives is this, like, they have these amazing expectations, but their effort doesn't match them, and so they don't reach them, and so they feel like they never give themselves a chance to succeed. And you gave yourself every chance to succeed with the level of effort you put into it.
Yeah, no, I really like that quote. Expectations are such an interesting thing too. My own observation of this, and there, I'm sure there's a quote, but I don't know if it's out there. Is that happiness is the difference between expectation and perceived reality?
Mm.
And I think it works with what you said really well, because I mean, the person that I think you described who's like unhappy about their effort also like perceives that they should have somehow met that expectation,
Right,
and the missing element may have been the
right.
effort.
And if you never put in the effort, you tend not to figure out that the happiness is in giving the effort, not reaching the destination. And so, like, that's part of the people they forget that, like, you get most of the satisfaction of from actually putting the effort in to achieve whatever that expectation is, not reaching it. And so if you don't put that in, you don't give yourself the chance to actually be happy.
Yeah,
Um,
I totally agree.
so okay, so back to your story. So this is first of all, somewhere in that story, you sort of perhaps we're the only person in the history of the world who held a dual role for network management and car repossession. But like maybe we'll get to that on your second appearance on the, on the podcast. But so okay, so you get into claims. You spend 2 years, convincing Allstate to take you. You then find a role that's the right fit for you. They bring you in. to claims? What happens next?
Yeah, so in claims, I worked that job like an insane person. Um, I It was the first time that I had a corporate boss, and my boss just kept telling me at each of my performance moments that like you're gonna burn yourself out, and I just looked at him like you just don't know, like you just don't know me.
Hmm.
And so like I would come in the first notice of loss, right? So like if you don't, if you know, but like for people that might listen who don't know what that job is all day long you sit available waiting for someone to call you and tell you about the terrible thing that happened to them. And all you're trying to do is figure out who do I give this to? Like it's just a triage job. And so like it some of the calls are very heavy. A lot of the calls can be relatively fast. It's data entry. I mean, it's like it's a it's a bit of a grind. And I was working the at that time I was working like the what would have been like the 3 to 11 p.m. shift. And so I would come in and I would, you would get scored based on quality and quantity. And I just like, I would go home with like massive headaches every day because I was just pushing so hard for the client. I memorized every area code in the United States, of which there were a lot fewer 25 years ago. But that way, when I picked up the phone, I already knew I could already fill in one
You
more
knew where they
field.
were coming from.
Yeah. And so like, so I did this. I only worked the phones for about, I don't know, maybe 8 months. And then they moved me into workload management. Um, and then I moved into small claims adjusting. And then I was also building the access databases that did the timekeeping management for that center. And this was actually a really neat experience because this was the first express claims handling
Hmm.
that Allstate ever did. And maybe I don't know where it sat in the industry, but like we were all trying to figure out like what's the trade-off between LAE and indemnity, on investigation if you centralize effectively. And by the way, like the center I'm working in, everyone's roughly college aged or post college. I mean, it's a very young crowd. This is no one's career but mine.
Like phone
And
bank.
so,
Like,
yeah,
hmm,
exactly. Yeah, you getting the vibe of what this was.
mhm.
And so I moved through the roles. This was again like this was my model was I need to amass all of the experiences, which ended up serving me really well later in my career. But yeah, I grinded really hard, and then at that same time, I was now like a junior and senior in college, and I had been trying to cram in four majors and two minors into 4 years while working full time. And so like
Four
this,
majors and two minors.
yeah, I didn't succeed. I ended up getting two majors and two minors in 4 years. And at one point I was only sleeping 5 days a week because I was taking 21 or 23 credits, and I packed them all into Tuesdays and Thursdays. So I was working third shift computer operations in the data center. And so I'd work from 11 something to 8 something in the morning. Then I'd start class at 9:15 until 9:30 p.m. with no breaks, and then I'd go back to work at 11 something p.m. And then I would get 12 hours off to sleep. And I did that for 2 semesters, about 10 months. And that is where I learned my physical limits.
Yeah, how
Uh,
did you do it at all? How did you make it through 1 month of that?
well, I mean, um, I think like the way you persevere through anything unpleasant is you just do it. But I mean, at first, getting out into third shift is like a real adjustment. Your body's not getting sunlight, like all the rhythms are different, and so like you're not really surrounded by humans during your working life,
Hmm.
and so like there's a lot of things to adjust to. I was in a fortunate position because I learned the best through reading, and I could read a whole semester worth of content in like 3 or 4 days.
Mhm.
And so I frequently would go visit the professor at the beginning and just say, like, I'm so excited about this class. What is the highest grade I can get if you never see me again?
Mm.
And so like I was just trying to balance all these things, but like it was the optimization point was so clear, which is how do you ingest the most information the earliest so that you can accelerate, in the on the career side of it.
A common theme, you as an 18-year-old, you realize that you're now progressing through your career with this same notion in mind of like, how do I sort of put in as much effort as possible to acquire as much knowledge and information as I possibly can. I don't. We've known each other a long time. I did not know the like 10 months of having to, basically not sleep twice a week is that's intense. A lot of founders have intense stories, but like 2 days a week without any sleep whatsoever is not common. You have to push yourself to a place that most people can't go to pull that off.
Yeah, I'm much softer these days, Kyle. You know,
That's fine.
it-
So am I. But having done it, now you get to talk about it for the rest of your life. So there you go.
yeah, well, and I stopped it because my body started really actually breaking down in ways
Hmm.
that I couldn't explain, like just really weird, scary stuff. And I thought, aside from just trying to not fall asleep on the drive between work and school.
Yeah, no kidding. Yeah.
So yeah, it was I mean, I learned a ton from it, but I don't recommend it to anyone.
Unless you want to achieve a ton in your life, then yeah, you probably have to do some pretty insane shit. But like find your own version of it. Don't do exactly that, right?
Yeah, that one. Yeah, agree. I think it is useful even in your own. If you want to do really big and transformational things, I think it's useful psychologically to just know that you can do different things.
Hmm.
Even to your earlier quote that like it's not that other people can't do them; it's that other people won't do them.
Yeah, that's almost always the difference. Is it's another great Mike Tyson quote, which is discipline is doing what you hate, but doing it like you love it. And
That is
like right, like that's usually the difference between people who find a way to get it done and those who don't is they have the discipline to do it anyway, and like you clearly do. Keep us going. Story's been fascinating. So you're high riser at Allstate, working your way through third shift jobs and going to school at the same day. So like,
yeah.
take it. Now you go through this 10 months of not sleeping nearly enough. What happens next?
Well, what I realized at Allstate, because I'm also at this point, I've started the Shawshank Method um, to become mentored by the chairman of Allstate.
Hmm.
And like I am, this guy has like 30,000 employees, and I'm the absolute lowest rung of that ladder. And so I start reaching out to him, with a plan to be doing this as long as it takes. And my issue is I just didn't know any CEOs. He was CEO and chairman at the time of any Fortune 500 companies, and like in my heart I believed it was worth his time because there was a good chance I would end up running that company. And so like I'm sure he didn't receive it the same way, but like these can be mismatched. And so that was a great experience because he did reach out to me and we did spend time together, and he kind of followed me through my career there. And I also got to watch it freak out the management directly above me.
Yeah, that was my next question.
These were both great lessons. And then, I recognized that Allstate, like, how in the world could I ever hope to run Allstate from its technology organization? I mean, my observation at the time was that this company does not plan to compete in technology, and actually, they weren't really even that interested in teaching me insurance. Like,
Hmm.
they didn't see it as germane to my job. And so, what I then started to do is kind of find my way in to the other departments' training classes.
Hmm.
In and around my free time before or after work. And so I end up in the leadership development program. The local education people loved me because like I just couldn't get enough of whatever there was to learn. And so like they managed to get me into the underwriting leadership development program, and I'm not in underwriting, right? I'm just some guy showing up. And so like one, I also then, yeah, I'm the only person asking questions, right? I'm asking all the questions, and I have a lot of questions.
Hmm.
And so like the instructors were the more senior people in underwriting, and then they started to recruit me, and so like I considered the options, and I was doing fine in technology, but I knew I needed to, this method of amassing information and trying to like know all the parts of the business that I might run someday. And so I took that job and I moved into underwriting. And at this point, I'm 24 years old. And at the same time, I'd just taken my first management job just after I graduated college, and and then they gave me a division manager job to move into underwriting. So now I'm
Hmm.
managing managers, and I've got about 50 employees, and I'm 24 years old, and I don't know what I'm doing, and I don't know the first thing about underwriting. Um, and so like this was like the perfect job for me because it was like, there couldn't be more fronts that I didn't know anything about, which meant that there was all of that opportunity to just learn so much. And I think the thing that I learned most that I didn't expect was just the human dynamics.
Hmm.
The politics of corporate life. And so like that was a good spot for me. I'm talking about my upbringing. I'm naturally service oriented. I love people. I'm slightly introverted, but like you can make a lot of friends by just like trying to be helpful when you
Hmm.
can.
Hmm.
But yeah, that's how I got into underwriting,
You
and
mentioned you
loved it.
you like to learn through books. The people thing is interesting to me because that's like the one area that gets. I mean, there's tons of management books out there. Don't get me wrong, but like learning how to navigate interpersonal relationships and politics in the office and stuff. They don't write a ton of books on that. Is that you just had to live that one and learn that the hard way?
Both. I have a love of psychology books.
Okay.
I don't love the management books. I mean, occasionally I find one I really enjoy, but I do love to read. And in that job, um, in underwriting, was the first moment that I noticed and said we should stop hiring quants and we should be hiring behavioral economists. It's the whole business.
Mm-hmm.
And like never did execute on that. But there are some really neat books in psychology. I mean, I think um, the Nobel Prize research of some years back around selection markets, you know, is basically just our business. There's like, I mean, it applies to other things as well, like relationships, but like, yeah, human psychology is so much of insurance. But I didn't start really reading insurance history until a few years later.
Okay.
But connecting that love of books and underwriting.
Uh, all right. So you're continuing your upward rise at Allstate. You're now managing this big team. Where do we go from there?
So from there, Allstate absorbs me into home office, which is the natural path. Although I don't know if they still do it that way, given post shelter in place work structures.
Mm-hmm.
But I moved into home office. I went into an underwriting strategy role, um, and um, and started to build my family at that time. I got engaged as I moved to Chicago from Northeast Ohio, and then moved from underwriting into product management at Allstate. And this was a great experience for me because I got in between those roles, I got to be the underwriting lead as Allstate went back into Massachusetts. I got to be the underwriting executive as they built the homeowners product that is only now sunsetting, 17 years later. And so a lot of real deep insurance stuff, and like I was so excited to get into the economics of insurance.
Hmm.
It's like the thing that they don't teach people in insurance, right? Like had I stayed in claims, like it'd have been really hard to learn the underlying economics of the business. And like this is this I feel like is the most fun part. And all of the non-intuitive stuff that makes consumers crazy kind of lives in this very small group of people's minds inside of insurance companies.
It's funny. I remember reading uh, the Werner Modlin sort of treatise on rate making, which they make actuaries read to get their FCAS, and it was my first foray into like the insurance economics you're talking about, where you start to understand the math that actually makes the business tick and like how things get priced and why they get priced that way and what has to get built into it. And like that was very, as a insurance entrepreneur, very eye opening to see that. Again, very few people I think are exposed to like that the full suite of math that goes behind why an insurance company does what it does and why it exists. And it is fascinating to get your arms around that whole story.
Yeah, I totally agree. And I find that, like, you know, people who can work their whole life in insurance just may never get exposed to this.
Hmm.
And so, like, it's part of why I love getting out to spend time with agents and with uh, all of the different parts of the business that don't get to play with this part, because you can do your job better for the consumer and for the company if you just know how you play a part. I tell this story to people that I was working third shift computer operations. I'm running all of the batch jobs for Allstate, protection, which was the PNC products, and so that's like all bills that go out, all investments that get made. And so, like, when I couldn't fix a broken job in the schedule, then I'd call like second and third level, the people that wrote the code, and I'd be waking them up at all hours of the night. And this one guy, you always feel terrible about waking people up. And so, like, if you think it's like, well, it's 4 a.m., I'll just give him till 5 o'clock out of kindness. I call this guy, and I remember him yelling at me. I remember his name. And he's like incensed. And he's like, you just cost the company probably $5 million, which to Allstate is not a real number. And who knows, like, I didn't know what jobs this was, some out of the life company and the investment portfolio. But the impression it made in the lesson was that by informing me, the least senior person in the entire company, of what impact I could have, you better believe that that schedule always got my attention because
Hmm.
I knew impact. And like that was like probably the 10,000th place of impact of the jobs I was managing.
Yeah.
And so, like, because I didn't, the rest of them were just jobs, but this one represented real money.
Yeah.
Like, if you can teach people how it works, we have a root, we call our principles at Branch the roots. There's a lot of tree metaphor, uh, as you might
It
imagine.
works. I like it.
Yep. And so one of our roots is called know how it works.
Yeah.
And so, like, we have a very free culture on sharing information, which in my experience, it's not just that you won't get exposed to how insurance works, but there is a little bit of like holding power in the political structure by knowing how it works when other people don't. You can
Mm.
hide behind it. You can say things like, well, the regulator will never approve that. And then no one can argue with you because only you,
Yeah.
stuff like, I mean, you've seen it,
Yeah.
and so, like, I think that's all negative. And obviously my ethos of like amassing information, like withholding it from other people, feels like unacceptable.
Well, that's interesting because they are separate. Amassing information for your own benefit is different than open sourcing that same information to others. It requires more effort to do the latter than just the former. So good on you for making that commitment to others as well. The question is for you on this, like knowing how it works concept at Allstate. How much of well, let me ask it this way: was there anyone other than you or someone on a similar trajectory to you who took the time to want to learn that stuff?
Um, I don't know, Kyle, if there was anyone like kind of on
Few
a
few
parallel
and far
track.
between, I imagine, who were like folks who wanted to make the investment in knowing about how it works under the hood.
Yeah, I think that's true. But there were people that had the parts and they were free enough with their information. I mean, it's an interesting thing about these super big companies is that if you they spend a lot of time in the executive ranks on leadership as a topic. And if you ask them, like at their retirement, like will you look back and be most proud of? Almost to a one, they will talk about whose careers they helped develop.
Hmm.
Because inside of those big companies, it's almost impossible to move forward,
Yeah.
make progress, like not transformational progress. Certainly, I mean, years ago I was on a temporary assignment launching e-signature, which today we don't hardly even think of as technology, right? I mean, it's like
Hmm.
it just
Hmm.
should happen. Like it should just be. You shouldn't have had to try to have that capability. And the person that was running the project when they assigned me to it had just been let go after 2 years of trying to get it done. And it took me 14 months to get the first four states using e-signature. And then after they rolled me off the project, I think it was another 8 years before they had it rolled out countrywide. And so like you look at your career and it's like, well, what do I look back on with real pride? And it tends to be helping other people. And that was a real benefit to someone who really
Hmm.
wanted to know. Every lunch day you would find me in the cafeteria, like just picking someone's brain on something.
Hmm.
And that had real dual benefit in both the networking element and how that progressed my career, but also, I was just filling all the holes in. Who did I need to know? And people were really generous with their time and insight.
Okay, keep it going. I mean, I'm glad I asked you how much time we had because this is fascinating, and I want to keep going on your story. All right, so you're continuing your path at Allstate. It tells me you were the youngest director in the company's history. Is that a true story?
I doubt that's true. I don't know how that got onto the internet.
The internet believes it, which makes it true. So
Yeah,
congratulations.
I, I have no references for that point, and I did not write that myself.
Fair enough. All right,
But
keep us going.
from there, I had just finished my basement by myself in my house. I was living in Lake Zurich, and my, I was trying to get it done before my firstborn showed up, and so I got that done. She was born in February, and then the first week of April, I was taken out to a bar by the SVP of Homeowners and the chief risk officers, and they said, "We want you in San Francisco."
Hmm.
And so, my daughter then was 5 months old the day we moved downtown San Francisco. And this was just this wonderful experience. Point, I was at that point I was 29, I think,
Hmm.
and I showed up at Esurance, which had been, a venture-backed startup. Just wrote auto insurance at that time, had an in-house agency writing other things to monetize the lead flow. And I was there to build Homeowners, and Allstate had published their strategy of making Esurance the Allstate of the web.
Hmm.
And so while there had been startups that tried to make an online homeowners business, no one had, right? They'd all pivoted or failed, pivoted to other distribution methods. And so this was designed to be the first online home insurance business in the US. At that time, the average homeowner's question set to get to a real price for insurance was about 170 questions. And we got it
170.
down to 83 questions, which is still objectively terrible by customer effort perspective, but it was a big accomplishment and, the first. And that was neat. And the cool thing about this, Kyle, is it really accelerated how, knowing how it all worked, because the developers would just say to me like, well, how do you do escrow billing? And I'm like, I don't know. We have
Hmm.
like a team. We had a team of people of like 40 doing nothing but escrow billing. And so like, ultimately, I had to write or sit on top of all the specs that went into every aspect of the whole operation. And man, what an accelerant that was.
Hmm. That's that in terms of like digital homeowners products. First, do you think?
That was the first for homeowners. Yeah.
First for homeowners, like
Hmm.
in the market. Yeah, very
Hmm.
much breaking new ground. 170 to 83 questions. How long did it take roughly to get through the 83? You remember?
To get through them or to get to launch?
To get through them. So for the user to get through, like I cut this question list by 2/3.
Yeah, I mean,
Quoting
I think it,
processes.
it was probably still about 15 minutes. The
Okay.
problem was that there were still some questions that like you wouldn't know off the top of your head.
Mhm. Masonry
Yeah.
and basement construction and all of the fun stuff.
What's your escrow account number?
Yeah, yeah.
Uh,
You're gonna need a little question mark with like, that you can hover over and see a bubble with a question
yeah,
like that.
in focus groups at that time, I remember asking people like, is your roof a hip or gable? And they just go cross-eyed, and then I put my hands above my head. Is it like this or is it not like this, right?
Was that in the flow? Was there a picture of you in the flow with your hands like
No, but we did use pictures in the flow because we couldn't otherwise help people do that. Yeah, home insurance so interesting too. It wasn't until about 2005 that anyone priced off of the roof as a risk. And because we'd never collected data, the industry didn't know that in a windy year, more than half of all homeowners' claims costs were just roofs. Right? Super interesting. Yeah.
it's
So that,
2005 when we figured this out?
well, I think 2005 was the first time I ever saw it in a rating plan. I was
Wow.
actually farmers insurance at the time. But that Allstate product, House and Home, was the one that devised the what's now known as the roof payment schedule.
Hmm.
And occasionally, I attend roofing conferences, and they brought me up once unexpectedly on stage and introduced me as the inventor of the roof payment schedule, which is not true. But I did have people come up to me after and say, "You're really brave to be here."
Yeah, that is you may not want to be that name in that room.
Yeah.
Funny story about inventing things you didn't invent. Years ago when we launched ClearCover, I was invited to a podcast which centered around like, financial independence for young people
Oh,
and
like the
and
fire
the,
thing.
the fire methodology.
Yeah.
Yes. And we said yes because we just wanted to be on any podcast. We were brand new. So I went to talk about how saving money on auto insurance helped you achieve your fire methodology, your fire methodology goals. And the first thing this woman, she was very sweet, but the first thing she says to me when we start the podcast is, so glad to have you on as the inventor of the fire methodology. How did you come up with that? And I wasn't like a super experienced podcast guest, so like I think I kind of just leaned into it. Like without accepting the honor, I was like, "Well, let me tell you about it." And so I don't know that I ever actually denied not inventing it until now. I can
That's funny.
formally deny inventing the fire
Were
methodology
you a
as I
part of
think
the
you can.
movement?
No, no. I don't think the fire methodology encourages you to put like almost all of your net worth in a single high risk security that you happen to also run. So I'm fairly sure I failed the criteria required to be part of that movement.
Very funny. That's a really good response to that question.
I failed. Yeah. All right. So keep us going. So your Esurance, you built the world's first digital homeowners insurance product, which now we're starting to see the breadcrumbs of like where how we got to the branch idea. But keep us moving.
Yeah, and so launched that business. It grew well, and it grew after I left, and it ran, mid 50s loss ratios the first 5 years into over 100 million in premium. It was a really good product, brought to market really well. Very talented team. A lot of folks, a lot of insurance diaspora since then, and a lot of the folks on my team are folks that are doing really interesting things in insurance and in the startup world. So very very proud of that group. We also, like back then, we as part of the celebration, we printed off the code that we wrote, and it was a stack of papers went floor to ceiling, and I would not be proud of that today. But yeah, it
Was
was a
it
big
the like
achievement.
printer with like the dual sort of perforated edges on the side? No, it was real printer
No, I,
paper.
I
Okay,
had those printers, but not at that era.
okay.
Yeah, and so at that point, we were pregnant with our second daughter, and all my family was still back in Northeast Ohio, and so we decided to move back to Ohio to be around family. I still had living grandparents, and so I started listening to job offers. And I was contemplating going back to Chicago. Would have been able to go back to Allstate. But I got this job offer from Verisk Analytics, which to me, I modeled it in my own career models of stasis, because I was an insurance guy. Like this was only to get home, right? Like this was a purpose driven move, which also made leaving easier.
Hmm.
But I had people tell me like, "What are you doing? You're ruining your career."
Hmm.
And it ended up being this wonderful change. First, I got to run a business that wasn't insurance. And it also gives you an appreciation for just how complicated insurance is.
Hmm.
Um, an existing business, many businesses don't have huge variable costs, especially software and data. And so you can solve most of your problems with top line growth.
Hmm.
You cannot do that in insurance. And so that was wonderful. The moment I walked into Verisk, and they're a huge data aggregator, not just of their own products, but reselling other companies' products that don't have a big footprint in insurance. So, like, I made this huge network in data. I understood, I was signing all those deals. So I knew what everyone was paying for data. I usually knew where
Hmm.
it came from. And so, like, an understanding of pedigree and economics of data, and then, getting to spend time with hundreds of insurance companies to talk to them about their strategies was also wonderfully interesting and insightful. I mean, my observation from that is like everyone's got a narrow problem to solve, and so everyone's innovation is like super similar.
Hmm.
And that every big company will like has their hand around their sheet so you can't see what they're writing down, but it's the same thing on your sheet.
Hmm.
It's like really um, and then also that was when I decided to build branch. I'd been pitching insurers on like you don't have I will make it possible where you could do instant insurance.
Hmm.
Like I have an economic proposition you will love that will benefit me.
As
And
Verisk, you're pitching them on being able to do this for them.
I was, yeah.
Yeah.
And I had tremendous interest. And I think a big company said it best to me, which is like, that's totally our 10-year vision. And I was like, well, 10 years, like, I know you guys change your vision every 18 months. And so, like, 10 years might as well be never.
What year is this when you're having these conversations?
This is like 2015, 2016.
2015, 2016. When you're at Verisk, you're talking to these insurers. Does the word AI come up ever?
Only in, no, 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 not at all, actually. I mean,
Big data, machine learning, maybe
yeah, I
not.
was going to say machine learning, computer vision was,
Hmm.
nascent at that point, especially with, aerial imagery becoming a topic, but not anything, not anything more, nothing broader than those were the real applications at the time.
That was definitely the age of like big data and everybody trying to use Hadoop in a sentence when they weren't sure exactly what it meant, and machine learning was the application of AI everybody wanted to talk about, but not where we're at now.
Right.
Okay, all right. So you're at Veris, you're pitching people on the concept of building something like a branch, and you run into a we love this idea 10 years from now, give us a call back. Then
Yeah,
what?
right. And like I'll have 10 years for anything. Right.
Yeah, I don't. Maybe they didn't hear your whole story, but the 10 years can go a long way when you don't sleep twice a week. So
Yeah, right. God, that can you imagine not sleeping for 10 years?
no.
But anyway, so I had also started reading insurance history around this time. Somewhere around like 2014, I really got deep in this, and I'd been obsessed with the question of I'm meeting with all these insurance companies as customers, and sometimes I'm just floored by them as a company, and I get obsessed with this question of how did big insurance companies become big? And so I started reading all of the books I could find, and then a lot of periodicals like Alfred M. Best from the early 1900s, or one of my favorite books is the History of the National Board of Fire Underwriters. Like I just anything I could find. A
Hmm.
lot of it out of Google Books. A lot of stuff I couldn't find in print. At least some cases, I was required by an academic institution to read the book on their premises because they wouldn't let me take it out of the
Really?
archive. Yeah. And so, like, I felt like it answered the question of how did big insurance companies become big? And it was at the same time that I was getting this 10-year response to this very logical thing that had to happen. And so, there came a moment where I would wake up in the middle of the night, which is not usual for me. And I just felt like I had to, like, write about it.
Hmm.
And I started writing and, calculating and like developing something like a business plan for a branch. And then, I ended up pitching my spouse on it. Like, what do you think about taking an 80% pay cut and like, and moving the family? And, and
Sounds
so,
very compelling. Great. The great
yeah,
way to frame the pitch.
yeah, well, it's important as a founder to learn how to pitch, right?
Uh-huh.
To,
Yeah, that's
to
good
communicate.
practice on your spouse. Like,
Yeah.
hey, do you
And
want to do
so
this
when,
terrible thing with me? Great.
yeah,
Off we go.
do you want to hatch this bad idea together? And so when I had support, I started, trying to fundraise, and like, all that I'd learned in corporate America, like, prepared me zero for fundraising. And I was clumsy and bad at it, like objectively bad. Like if you met me then, you'd be like, that guy's got no chance. And so, actually, it's funny now. One of the first VCs I pitched, I met up with him again years later, and he's like, I get a lot of corporate executives that think they can be founders, and like they're all full of it, right? Like there's nothing there. And so, like, I was just being polite. And so he kind of walked me, but he gave me this great insight, which is like, look, the thing you're doing is inherently tech. And so, like, you'd be benefited by having a technical co-founder. And I loved this idea. And so I started reaching out to friends. I mean, I had old friends from my IT days, which I didn't claim being technical any longer. And one of the folks I reached out, and by the way, I was on founder dating websites. I don't know if you know these exist, but if you don't know where to go, I think this is where you end. It was a dark period for me.
Founder
And,
dating websites. I don't think I've ever been on one. I know they exist. Derek, I
yeah,
never cheated on Derek with a founder dating website.
I'm sure he appreciates that.
Yeah, I don't know. He might have been happy to have been replaced many times along the way, but he wasn't.
But I reached out to a friend of mine, Joe Emerson. He had founded a company called BuildFax. I was his first big insurance company buyer years before at Allstate.
But Joe wasn't on the dating, the like, find a
No,
founder
no,
was
this
okay.
was,
Just
yeah,
just
I was,
just making
yeah,
sure.
I
I don't
had
think Joe's
deployed, yeah. No, I don't, I think I told him this, and I think he laughed at me
you
in a,
fished
in
there
a
just
kind
long enough.
of correct. Yeah, and so I reached out. Joe was one of the folks I reached out to, and he had been selling to insurance companies long enough for what I was explaining to him to resonate. And I didn't realize some of what had led him to that moment. And so he was in a position to really listen to what I was saying. And I had just innocently asked him, like, do you know anybody? And kind of the two of us have been at it together ever since.
Hmm.
And so it was about 80 pitches before we signed the lead. And we signed the lead on Christmas Day 2017. I put in my notice in January of 18. I was gone from Verisk in February of 18, and then, from there we built.
The Why do you think Joe said yes?
I think, well, Joe is one of the most methodical people you'll ever know. And so he can break it down into components. But the big chunks are that he had founded 6 companies by then, all of them still alive. He built the first software to make the iPod work with Windows. I mean,
Hmm.
he's still got a video game online called Mutant Chicken Races that he won awards for way back when.
Mutant chicken races?
Uh huh. Yep.
Oh, yeah, we should put that in the show notes. Mutant chicken races. We can get us some
Yeah, you
traffic.
can find it. Yeah, and so he describes it as like he kept building. businesses that couldn't be that big, which created all kinds of
Mm,
pressure as the founder. And like when you think about like the energy it takes to build any kind of tech business, and so like he experienced this, and he had told himself like next time that opportunity comes along, he's not going to miss it.
mm,
And so he heard this for what he believed it could be, and I have believed, and I continue to believe, with enough time, this can be the biggest business, insurance business in the U.S. But a lot has to go right. I mean, the founder's journey. Like, there's a lot of downside risks in it. And so, I think that was the biggest thing for him. As a multi-time founder, like, he and his family knew what it took,
mm.
and he was looking for that next thing. He had also been bought by a bigger company, and he was living the corporate executive life. So if you're a six-time founder and that's what you've been doing since high school, he was ready. I caught him at a good time.
Oh, that's funny. Yeah, it seems, having watched you guys run the business together for so long, like it feels like a great fit. It seems natural, and I like understand, post facto why he would say yes. But hearing you say like I was objectively bad at pitching, and Joe, I don't know Joe super well, but I follow him enough on like X, formerly Twitter, to get the sense that like he's a guy who has strong opinions and conviction about his opinions. Like you must have done something right to convince somebody who doesn't appear to be that easy to convince of things to join your brand new idea.
Yeah, I've heard him talk about it. I think I he and I did a deal at Esurance. He and I did a joint venture when I was at Verisk. Verisk ended up buying BuildFax from the company it was owned by after we
Mm,
both left. And we'd spent a lot of time together, and I'd heard him describing me as the smartest person he'd met in insurance, which I think is easy for him to say because he's smarter than I am, so it's non-threatening. But I think like I had strong conviction, and I could explain how it had to work.
hmm.
And he is a person of conviction. I think both of us really appreciate people who have beliefs. They can iterate on them, they can change them, but it's the people that lack conviction that are, I think we both share, not a lot of love for wanting to spend a lot of time for people that are more on the wishy-washy side of things.
When you're pitching the insurance business back when you started it, and we lived this at the same time. And I'll say this with all due respect to everybody who was also pitching at that time, but there was this big disconnect in the funding ecosystem, which is that most investors just didn't know what they were doing. Great people, they just didn't really know what they were doing. And so when you don't know what you're doing in a space, you don't really have a full grasp of, like you talked about it, like going in the library archives to read the economics of how an insurance business really works and how tail risk can bite you in the ass if you're not careful, like all these things that like you really ought to know. If you don't know those things, then your investing decision biases towards passion and perceived expertise. And so those who can put on a show about being an expert and who are very good presenters, who can like do the song and dance well, they get funded because that's what you fund when you don't really have all the underlying information in order to make that more rational decision. And so you saw businesses got funded but with lots and lots of money because of perceived expertise and passion, whereas the businesses that had this very deep underlying knowledge of how to run the business properly really struggled to get funding. And then when the hard market hit, it you saw like positions flipped. And those who had like stuck to their guns and said, "Hey, I know how these businesses work, and I'm going to fund one that makes sense rationally and economically speaking with respect to how insurance works," uh, did okay because their businesses were on economically sound footing. And there were other businesses that had raised money and just you know, didn't have that same economically sound footing and had to respond to it. Now, some of them responded to it by having tons of money to deploy it, fixing it. But like again, like this disconnect. I don't think you were objectively bad at pitching. It's I guess what I'm saying. I think you probably just knew a lot of details around how the business should get built, which didn't resonate perfectly with what the market wanted out of a pitch at that point in time.
Yeah, no, there's so much truth. Like I had one VC say to me once, I'm explaining like you can buy like 5 insurance policies in one transaction with just name and address. And he's like, well, how is that different than my insurance company? I was like, I can't.
You know,
I'll put myself out.
I pitched a few people who I don't think ever bought. They didn't buy their own insurance anymore. You know, they had a person who did it, and so they didn't connect so much with the how
Yep.
hard it is to buy your own insurance from. All right, Steve. So
Yeah.
we're gonna do another episode to get to the whole branch story because we're not gonna be able to cover it today. But I want to talk about branch and Ember with respect to some AI stuff, so we
Yeah.
can make sure that otherwise I'm going to get in trouble for being a podcast host about AI and never talking about it. So
Okay,
let's
great.
let's talk about your current businesses. You've built across sort of the entire value chain your whole career, and now with Branch you own a full stack insurance business, reciprocal exchange, like the whole thing. Where in your mind is AI actually working today in real dollars, and where is it still hype?
Yeah. I mean, it is. It is making the biggest impact for us in places where our humans would really rather not be doing that work anyway. And so I think in the disciplines, we're having the most success in some of the more repetitive aspects of claims and coding. We've got a lot of excitement in customer service and sales, but we've had more of our customer service implementations fail out for just not that being that useful than we had anticipated.
Interesting. What does not that useful mean? Didn't work for the customer, or it didn't work for your bottom line, or both?
Yeah, just it wasn't. It just wasn't. Didn't seem better than the existing process. So, like as an example, we were really excited about. We had created a kind of a closed circuit RAG architecture for when someone called in. And we operate in 25 states, and we're also an agency, and so like we're multi-line, and so like you're gonna get a question, as we call it member support, as part of the exchange, but in member support about something you're not totally sure about, like how does the good student discount work in auto in Missouri. I mean, and so we had built an ability that inside of Slack they could just ask the question, and the LLM would give them the answer, and they could then have first call resolution, faster response time, and it just didn't really move the customer effort or the internal effort enough to
Hmm,
be worth maintaining the carrying cost of that implementation.
interesting.
And I suppose we overestimated the pain, and so like that one just kind of fizzled out.
Hmm,
That said, some of our claims implementations, and not just in text, but also using voice AI. We've been relatively public supporting a company we've worked with to co-develop this. But that thing's been incredible. Actually, I've a bunch of these examples. We had one where we were developing demand letter responses that took out like 90% of the time our adjusters were spending. And you can think of such a perfect use case for this, because when you get a demand letter, it's in the context of a claim, which is in the
hmm
context of what coverage did or didn't apply, which is in the context of all the other contacts with the customer. And so, like, you're basically just synthesizing data from
hmm
a lot of disparate sources and putting it back together in text. How perfect is that
Yeah.
for an LLM AI? And so now we're building more in the agentic side. And I think what's been really powerful for us is Joe. As Joe is like a savant of knowing all the startups, and he's he's still got his hands on tech. He still writes code here. It's part how he keeps himself fresh, and he'll reach out to any new startup's product manager and say like, "Hey, can you solve this problem I have?" And we've built the tech stack in such a way that it's about rapidity of iteration.
hmm
But that was before the LLMs were here, and so now to have this, and we can plug and unplug stuff so freely. We don't have a position that all of the implementations will be successful. We're only about I want to say about 50-50 on whether something survives the implementation, an AI implementation. But it's going really fast and the tech is developing so quickly. It's been a lot of fun to be able to put it in and take it out if you don't like it.
That's fascinating. So you'll launch something if you think it has a coin flip chance of working because your ability to reverse the decision and try something new is that low cost for you.
That is true. I mean, I think we don't think about it as 50-50. I think we tend to believe,
Right,
when we're
right.
doing the thing. But I think what we're finding is if we're disciplined about the assessment, that they don't all produce as well. I mean, and that I suppose that is kind of counter to the narrative in the world today. Everyone has to be saying they're doing AI,
Hmm.
and so I think they do have to be doing it. I mean, I do think they do have to. But like, if I was still in some of the big companies I worked with, I think there's still a lot of talking about it. And I think it is really hard to fail these things out, both for the emotional investment and that you told Wall Street that you're got this big AI implementation, which really does handcuff you on just throwing the thing away to some degree.
I mean, you've been at this for a long time, and are a tech native company yourselves. Like our experience at Clearcover was when we sat down end of last year, beginning of this year, to try and assess how we take advantage of the technology that existed in the moment. Our assessment was, even as a 10-year-old AI native or tech native business, a lot of what we did had to change. Almost everything that we did probably had to change. Has that been your experience, or did you build smarter than us and like you feel like enough of the business is stable and the newest version of AI doesn't have to change that much?
You know, I think it's because this is Joe's seventh startup, but he at the very earliest days, I was applying my old methods to thinking. And I'm like, well, some of these things we have to think about the scalability. And he's like, let me stop you right there. He's like, anyone who talks about scalability is something to solve for has missed the whole point because we don't know. We're going to look so different by the time that matters.
Hmm.
Right. And I'm talking about like when we hit, we're at zero. When we hit 100 million, we hit 500 million, we hit a billion in premium. He's like, why don't instead you tell me what you need right now?
Hmm.
And then we can talk about, and so like we've been in the practice of just we had launched with a CRM, and 2 years later, we tore the whole thing out, launched with a new CRM. And the whole structure that Joe has built is based on a philosophy of try not to build anything that someone else has done the heavy lifting on,
Hmm.
unless it gives you a core advantage, which tends to then be somehow customer facing. And then build around rapidity of iteration rather than like how you might think about scalability and hardness. And then treat all data as if it's hot to the touch, if it could ever be considered personally identifiable.
Hmm.
And like, I'm sure he has other things he'd add on to that, but like those things have been kind of the governors. And so, like, our tech is, I think, it's just incredibly light and inexpensive to operate. And I think it's just because Joe is Joe. I mean, I don't know if I had told you, but Joe was published 2 years ago by Pearson on a book called Serverless as a Game Changer. And it's basically how insurance companies are built and how branch is built and why it's differently good.
Hmm.
And this is just before OpenAI launched.
Is there anything that you or Joe have sort of continued to think of as off limits for AI in your business, where you're like, look, we just don't. This is not a place where we feel like it's useful or we want to invest in deploying.
I I don't think we've defined any kind of region of thinking in that way. But I think we are generally like trying to pressure test. The way that the branch roots work is we ask everyone here to ask why continuously.
Hmm.
And hopefully the hypotheses are falling out of that exercise. And like once you've worked through a hypothesis, then somebody's got to call the play. And that's the next act. And then we ask that people develop a V1. And so there's this kind of, I refer to it as branches version of the scientific method.
Hmm.
And so in that, like we would really like to express all the problems and consider, what solutions, and AI may be one of. We have artificially suggested we would like to have more AI implementations, and Joe, had proposed, and we then got, Chat GPT subscriptions for everybody, like within the first couple months of it launching. Everybody in the leadership team, trying to get people like comfortable in using. Um, but there's nothing off limits at this point. I mean, and like, you know, I'm really interested in how this interacts with the regulatory model, right? That's the
Hmm.
closest thing there will be to off limits.
Yeah.
But I also got to live this. Like when we worked through, can you sell insurance online, right? Like the online was the agent. That was ultimately like the basis for why that's acceptable.
Right.
And so if the online is just the company, then the company is of course licensed to transact insurance.
Right.
And so, like, I think there are some railways for this that are worn. I mean, that doesn't make this a shoe in, right? When we're using AI agents, but no, we don't have anything off limits. Do you guys have any things you think are off limits at this point?
No, I don't. I don't think so. I mean, I'm with you. I think anything that touches the like compliance and regulatory is, I wouldn't say off limits, but like the bar is much higher. And where you think about risks and return and how much prep work and experimentation is allowed, like that, that's where we're particularly careful. But I think we. It's interesting. You sort of talked about the roots and your scientific method. We do the same at Clearcover and now at Deer Run Labs, but. Um, like a lot of whys to unearth what's actually going on, what the problem is, and then how you should solve it. I think our approach to that scientific method has changed pretty fundamentally in the last 6 months because of what the LLMs are capable of. Because
Mhm.
your like iteration loop, your essentially your OODA loop in terms of like how you deal with that process is so much faster. Because I can have a discussion with my personal chief of staff in an evening that used to take me weeks with employees, and then that same AI can spin up a demo of the thing we came up with to then go to get feedback from those people. And so like I think that iterative process, nothing's off limits. If anything, what we have to try and control is the velocity of new
Mhm.
ideas, because it's just so much easier to take things further down that y iteration loop than it used to be 6, 12 months ago.
Yeah, Kyle, I love that. By the way, an observation I've had since starting Branch is that one of the challenges I've had hiring people that come from where I come from is that, and I don't mean Allstate, I mean just mean big companies or Esurance or wherever I've worked, is that you're so used to limiting your progression to the dev calendar, and you
Hmm.
might only get 10, 12 cracks a year, and so you're scheduling the stuff far in advance of insight.
Hmm.
But then there's a forcing function to have insight. You can't help it. You're just watching the thing, waiting to get a chance to do something about it, seeing if you want to iterate before your dev change has to
Yeah.
go in.
Yeah.
And like in your company and mine, like you need to the new limiting function of an iteration has to be the insight development. And that velocity is fundamentally changed, as you said,
Yeah.
by AI. But I think it requires a whole different way of thinking about the discipline to, well, how many observations do I need? How do I gather them? Like between swings, because you could probably make changes every day if you wanted to,
Right.
and like that's
Yeah.
not
It's
productive.
no, it's a fascinating and we did, I mean, we don't have time to talk about all of it, but we had to also fundamentally reinvent how we think about the software development lifecycle at the business, because when you're like iteration and ideation methodology changes so rapidly, you plug it into the same SDLC and you end up on this like 2 week sprint cadence to deal. There's 27 ideas in the backlog by the time you get through your 2 week sprint and work through whatever, and so there's all, even if you don't think like the insurance workflows themselves will change that much, which they will, but some people just haven't quite gotten there. I think you have to, like, the way work gets done internally that underlies those workflows, like that has also changed in a pretty meaningful way and requires some effort to adapt to, whether you're a big company or a small and supposedly tech native one that still had to go through all of that.
Yeah. Well,
Steve,
when
I
we do part two, Kyle, I do want to do the long term of insurance economics too. Uh,
if we're gonna have a very specific audience for that one, but I love it. I am in for the long term insurance economics. Steve, two quick fires, and then I'm gonna let you go because I know you have to some businesses to run that aren't being on this podcast. So quick fire quote. You gave us your Andy Dufresne quote. Usually I ask for a quote, but you gave us a couple, including Andy Dufresne, which is fantastic. I love Shawshank Redemption. Leadership. Um, we talked a lot about your background. What's this 18-year-old kid who went on this information assimilation journey and advanced through all of these different roles. What advice would you give that kid if you could go back and talk to him today?
Man, Kyle, that one's too hard to be quick hit. I don't know. I don't know. I don't know. I mean, I think life is about um, the hard things that you have to go through or you choose to go through. And I worry that anything I would tell him would try to be preventative of the things that made me me.
Hmm.
And so, like, I would probably just observe. I don't think I'd
Good
say anything.
luck, buddy.
Yeah, keep at it, man.
I love it. That's great advice. Well, I talked in CJ's episode. His advice to his younger self was, "You can do it." Like, which I think is in the same vein of like, I don't want to change anything. I just want you to know that like you can do it. Keep at it.
Yeah, love that.
All right. How about now technology? So, what is a contrarian belief you have about how AI actually gets adopted in insurance that you think most of the industry has wrong?
Well, I don't know that I'm fully formed on this opinion yet, but I don't understand. I totally understand the building blocks of NVIDIA and the capabilities then of the frontier models. But I don't totally understand how we can have another 1,000 companies using those tools that I can use as well to build
Hmm.
whole businesses that could each become ultra valuable. And it's contrarian in that that's absorbing like a lot of the venture dollars today. And I just haven't like I feel like we have this fundamental problem in valuing new industries in and which is probably healthy for the economy to kind of overvalue what the revenue can be and the defensibility and believe in the constraint of supply.
Hmm.
But I think actually what we usually see is that supply is ends up being the thing that's not constrained.
Right.
And so that part I'm just marveling at the market right now, which might be contrarian, but it's only a half a thought.
No, I'm with you. I think we've had this conversation many times about how building a software business has never been easier and never been harder because building it is easier than ever, and figuring out that it's going to be around for longer than 3 months has never been harder. And so, like, this is the contrarian sort of place we all sit in as if you're running a software business is like how do you it's easy to exist. How do you continue to exist?
Well, Kyle, and the wild part of this is typically the most complex businesses are the hardest to fund as an investor. But I think the benefits of AI generally inure to the owner of the problem.
Hmm.
And I think it's a really like I think we talk about in economics of the industry. Like think about what the brokers have gone through in valuation this past 12 months. And so like what do those things mean? I mean like who owns the problem? Who owns the customer and its problem? I think is a really interesting long-term thing to consider.
Well, you've got a bunch of them, and I've got a bunch of problems. So combined, we can probably figure this out.
We'll get to find out together.
uh, Steve, this has been a blast. Thank you so much for sharing your story with us. There's definitely going to be a part two because we did not get to everything, but this is a good start for everyone to get warmed up on your story and the branch
Yeah,
story. So
appreciate it.
thank you very much. Appreciate the time.
It's great to spend time with you.